On February 27, 2026, a company called Block fired 4,000 people, 40% of its entire workforce, gone in a single day. The stock jumped 24% the next morning. Wall Street didn't punish them. Wall Street celebrated. Block wasn't alone. In the first 3 months of 2026, nearly 60,000 tech workers lost their jobs across 200 separate layoff events. That's 681 people per day. Amazon, Meta, Atlassian, Pinterest, Autodesk, the list keeps going. And what makes 2026 different from every year before? It is the reason companies are giving. They're not blaming the economy. They're not blaming overspending. They're pointing at AI and saying, this is why we don't need you anymore. By the end of this video, you'll know exactly how many of those layoffs are actually caused by AI, how many are something else entirely, and why the stock market keeps going up every time a company fires thousands of people. To understand 2026, you have to go back to 2020. When the pandemic hit, the entire world moved online. And tech companies responded the only way they knew how. They hired everyone they could find. Amazon added hundreds of thousands of workers. Meta nearly doubled its headcount. Block went from 3,835 employees at the end of 2019 to over 10,000 by 2022. Startups that had no business hiring 500 people hired 500 people anyway, because venture capital was cheap and growth was the only metric that mattered. By mid-2022, the hiring had become absurd. Engineers were getting 4 competing offers before finishing their first interview. Signing bonuses hit 6 figures. Companies were paying people to exist on a headcount spreadsheet, not because they had work for them to do. And then the music stopped. Interest rates went up, growth slowed, and a chatbot called ChatGPT showed up and changed the math on how many people you actually need to run a software company. The first wave of cuts in 2023 and 2024 were corrections. Companies admitting they'd hired too many people. That's normal. It happens after every boom. 2026 is different. Companies aren't saying they hired too many people. They're saying they don't need people at all. Start with Block. Jack Dorsey wrote a letter to shareholders in February that read like a manifesto. He said intelligence tools had changed what it means to build and run a company. He said a smaller team, using those tools, could do more and do it better. And then he fired 4,000 people in a single announcement. Not gradually, not in phases, all at once. His reasoning was blunt. He said he'd rather act on his own terms than be forced into it later. And he predicted that within the next year, the majority of companies would reach the same conclusion. The market loved it. Block's stock gained 24% in after-hours trading. Analysts at Evercore ISI called it a seminal moment in the AI era. Truist Securities raised their price target. The message to every other CEO in the country was clear. Fire people, say AI, watch your stock go up. And others were already moving. Amazon cut 16,000 jobs in early 2026, despite reporting record revenue of $716.9 billion the year before. The company framed it as flattening management layers and speeding up decision-making. Atlassian slashed 1,600 jobs. 10% of its workforce and its co-founder said the restructuring would self-fund further investment in AI. Meta cut 1,500 from its Reality Labs division and is reportedly planning another round that could hit 16,000 workers, 20% of the entire company, to redirect spending into AI infrastructure. Then there's the global picture. WiseTech, an Australian logistics software company, cut 2,000 jobs. LiveSpace in Singapore cut 1,000. Baker McKenzie, one of the world's largest law firms, laid off up to 1,000 employees as part of a shift towards AI-driven legal work. Ocado, the UK grocery company, cut 1,000 roles after completing a robotics and automation investment phase. Rational FX tracked the numbers. Out of roughly 45,000 confirmed tech layoffs through early March, about 9,200 were explicitly linked to AI by the companies themselves. That's around 20%, double the rate from 2025. But here's where the story splits in two, because 20% means 80% of layoffs had nothing to do with AI. And that raises a question nobody in a boardroom wants to answer, honestly. Resume.org surveyed 1,000 US hiring managers earlier this year. The results were revealing. 59% of companies admitted they emphasize AI when explaining layoffs because, and this is language, It sounds strategic and forward-looking. Only 9% said AI had actually fully replaced roles at their company. 9%. That means more than half the companies using the word AI in their layoff announcements are doing it for optics. Not because a chatbot replaced a department, but because saying we're restructuring around AI sounds better to investors than saying we hired too many people during COVID and now we're fixing it.
Will Slaughter, an investor, pointed this out publicly about Block. Between 2019 and 2022, Block tripled its headcount from 3,900 to 12,500. Slaughter called the layoffs an unwinding of what he described as an insane COVID overhiring binge and attributed them to mismanagement, not AI. Dorsey pushed back, claiming the company was targeting 4 times its pre-COVID efficiency. But even he admitted the overhiring happened. None of this makes the layoffs less real for the people who lost their jobs. Whether you were fired because of AI or because a CEO wants their stock price to go up, the result is the same. Your badge stops working, your Slack goes dark. You're on the job market competing against 60,000 other people who got the same email you did. And the reemployment market is brutal. The average compensation for a laid-off tech worker in 2026 sits around $185,000, including base salary, equity, and benefits. That's the kind of income that doesn't get replaced quickly. Commercial real estate in San Francisco hit a 36.7% vacancy rate in Q1. Seattle's tech corridor saw sublease availability jump 22% year over year. The neighborhoods these people lived in are feeling it. So what's actually happening? 3 things are converging at once. First, a genuine correction from pandemic overhiring. Companies that doubled their headcount in 2 years are finding their way back to reality. That would have happened with or without AI. Second, a real, measurable increase in AI capability. Block's internal teams reportedly went from 8 engineers to 1 on certain projects. That's not branding. That's a real productivity shift. Third, a stock market that treats the word AI like a performance-enhancing drug. Every time a CEO says AI during an earnings call, the share price ticks up. That creates an incentive to frame every decision, even ones that have nothing to do with technology, as an AI story. And 59% of hiring managers just told us that's exactly what their companies are doing. If you work in tech, the honest answer is uncomfortable. Some of these layoffs are AI, some of them are cleanup, and most of them are both, tangled together in a way that nobody, not the CEO, not the analyst, not the laid-off engineer, can fully separate. The number to watch isn't 60,000, it's the pace. In 2025, 245,000 tech workers were laid off across the full year. If the first quarter of 2026 holds, we'll pass that by December. And the companies doing the cutting have never been more profitable. If you want to know exactly which jobs are in the firing line, not which ones might be someday, but which ones AI is already performing right now, that's the next video. It's built on Anthropic's own data. Link is on screen. Subscribe. The next round of numbers drops in April.